right, let's talk some Bitcoin and macro. I have a shirt that is really inspired by you.
Isn't it?
Right?
It's so sweet.
It's the Do the Math shirt.
And who are the guys that make that?
FOMO 21.
That's
Neil
right,
Jacobs.
FOMO 21.
Yeah.
So my daughter bought me the hat that says Do the Math for Father's Day.
Do people come up to you and say, what's that about?
I keep it on the shelf in my office, actually. So when people come into the office sometimes, but I've worn it around. A couple of people ask me about it, you know, not too much.
I mean, it's simple math according to you.
It is simple math.
So what's going on with it? I mean, it's been a couple months since we last talked.
Okay.
I think it was in Amsterdam.
Okay.
We were talking about zombie banks.
I'm thinking
we were
things
talking
are
about
breaking.
Credit.
You're watching Credit Suisse break in real time. Now, Credit Suisse is a systemically important financial institution, and there's a run on the bank. The wealth division is losing assets in magnificent fashion, and that's a very key profit driver for the bank. And it's essentially a run on the bank. And if CSFB gets in trouble, it's not just about CSFB, it's about all the other institutions that have exposure or counterparty risk.
What's CFSB?
Oh, sorry, Credit Suisse. I call it Credit Suisse for First Boston because that's my old CSFB is in my days when I traded. That's how but now they're just down to Credit Suisse.
Okay.
Yeah, they bought First Boston, a big investment bank in New York, and then they were CSFB for the longest time, and now they pared down to CS.
Why that one as a first domino?
Because it's in big capital trouble. It's only got a $10 billion market cap for about $1 trillion of assets, which is ridiculously low. And they'll say, oh, well, we meet BIS capital standards, but the problem is BIS capital standards doesn't mark to market. Okay, I don't want to get too granular with you, but the reality is their market cap at 10 billion is really just a rounding error. And I'm not saying that they're insolvent, but I've seen enough banks in that situation that are insolvent, and that is very, very scary.
On stage yesterday, you talked about how you see Bitcoin as an insurance policy.
Yes.
You talk about the credit default swap. So for those that maybe aren't as familiar with that, why do you refer to it as insurance policy?
Okay, thank you for the question. That's not grade 11 math when I start talking about credit default swaps. But I was a credit trader for 30 years. And I like to think of Bitcoin as an insurance policy on the fiat ponzi. Okay, now it's absolutely 100% certain that the fiat ponzi will fail. It's just a matter of when. And it's like owning fire insurance on your house. You don't ever want your house to burn down, but let's say you see on the other side of a valley a forest fire. Well, if the forest fire is approaching your house, you know that you're in trouble. You'd certainly want to own insurance. And you don't trade that insurance. You keep that insurance. It's not, and I like to think of Bitcoin as the same thing. It's insurance on the fiat ponzi that's extremely cheap, and yet lots of people are inclined to buy and sell it. And I'm like, you don't sell your fire insurance on your house, much like you don't sell Bitcoin as your insurance policy on the fiat ponzi.
Well, right now, a lot of people are talking not only about commercial and traditional banks, but the crypto banks. And it seems like there's an effort by the current administration to choke off some of the on-ramps. So Silvergate now in the headlines. Can you share any thoughts or reaction on what's happening?
It's concerning. The reality is they are all small banks that can easily lose their position in the market. There's Silvergate, and I'm forgetting the second one. It's a little Signature, correct? It's a little larger. This is primarily for crypto on-ramps and stable coins. That for the buy and hodl self-custody Bitcoin person, we shouldn't think too much about it. But the reality is it impacts the ecosystem and the broader crypto ecosystem. So it's like an FTX type of event that will impact the asset class.
I was really surprised because I was talking to someone just here at the Ski Summit who runs a company in the space, and they were debanked over the last several years. First it was, I think, Wells Fargo, then Chase.
Right.
And now they're with a state bank.
Yeah.
And the FDIC came to that state bank and said, no, you should not be, working with these companies. And then they fought back and they actually won. They said it was an overreach. But Caitlin Long as well. She was
Yes.
on my show, and she said we're in the midst of a debanking wave.
Yep.
And I think it could hurt Bitcoin adoption,
No
at least in the short term, right?
Yeah. Can it hurt Bitcoin adoption? It might actually promote Bitcoin adoption. But what it hurts is the larger institutions that need that on-ramp that's not like, buying and self-custodying Bitcoin. They need a custodian. They need the liquidity providers, custody. When you're managing a much larger pool of money, you need these on and off ramps.
What are you watching right now in the space? What are you most curious about? Because I don't know if you get this sentiment or this feeling, but when I talk to people in Bitcoin right now, it's almost as if we're in some sort of like a holding pattern, waiting for something to happen, waiting for a credit event, waiting for maybe the bull market or the pivot. Do you feel that way, or what are you watching right now?
I try not to overthink it in terms of, defining a pivot. I certainly am watching CSFB. My dashboard is very small right now, meaning, when I traded, I would have a dashboard every morning. You check, where's the Dixie, which is the DXY, the strength of the US dollar, where are US 10 years, are banks up or down, where is gold? And I think you can distill it into a couple of trades that you don't have to have a dashboard with 25 different things on it. But I already brought up one of them. Watch Credit Suisse. Watch CDS. And it's more difficult to watch credit default swaps on CS, Credit Suisse. But you can everyone can watch the stock price. Okay. So the stock price recently broke below $3 a share, which was like the line in the sand. And you throw out concerns like, we already know it's insolvent. It's just a question of, does the market take it to that point? So, I'm worried about US 10 years, which are hovering around 4%, and CS First Boston. And here's the big one, commercial mortgage-backed securities. Okay, I think that the subprime mortgage crisis in 2008, 2009, which basically drove the great financial crisis, I think this one is commercial mortgage-backed securities. So you've already seen Brookfield, one of Canada's largest office managers, default on a Los Angeles property. You've seen BlackRock default. And who are the people that own the mortgages? The banks. Or they've been securitized and sold out into the market. So commercial mortgage-backed securities, watch CMBS. So here are the three. US 10 years, CMBS, CS, Credit Suisse. I call them Credit Suisse First Boston because I'm an old fogey, but Credit Suisse.